Welcome back to Tesla Daily News Podcast. Today is Friday, December 19th, 2025. We're covering the biggest Tesla headlines that could move the stock, a major regulatory threat in California tied to Autopilot and full self-driving marketing, a surprising Powerwall safety action, fresh debate on Tesla versus Waymo and robotaxis, and a new Tesla patent that hints at Starlink hardware built into future vehicles. Let's start with the story that has the most direct, near-term stock risk. Story 1. California is threatening a temporary sales suspension over Autopilot and full self-driving marketing. Here's the hook. Tesla could face a 30-day suspension of its license to sell cars in California if it doesn't change how it markets Autopilot and full self-driving. Context: California is Tesla's most important single-state market in the U.S. for EV adoption, charging density, and brand presence. Even a temporary sales interruption is meaningful because it can hit quarterly deliveries, disrupt end-of-quarter logistics, and create headline risk that affects analyst sentiment. Details: multiple outlets report that California's Department of Motor Vehicles found Tesla's driver assistance marketing misleading. The state is reportedly pushing Tesla to tone down claims and terminology around Autopilot and full self-driving. One report frames it as a judge-backed decision that could lead to a 30-day license suspension early next year unless Tesla changes its marketing. Tesla's public stance, according to coverage, is essentially that it disagrees and that customers understand the product. Impact. For investors, there are 3 layers here. First, deliveries. Any inability to sell in California for even a month can shift demand into later periods, potentially hurting a quarter's delivery and revenue timing. Second, margins. If Tesla has to stimulate demand to make up for lost time with discounts or incentives, that can pressure automotive gross margin. Third, the autonomy narrative. Tesla's valuation continues to be sensitive to the market's belief in future software revenue from full self-driving. A regulatory ruling that calls Tesla's messaging deceptive can chill consumer adoption, increase legal exposure, and raise the probability of stricter disclosure requirements. Takeaway: watch for Tesla's response strategy. If Tesla opts to rename features, add clearer disclaimers, or adjust marketing language, that may reduce regulatory overhang, but could also reduce the autonomy premium in consumer perception. If Tesla fights aggressively and the ban risk remains, expect elevated volatility. Story 2. Powerwall 2 remote disabling over fire risk is a trust and energy growth issue. Hook. Tesla remotely disabled some customers' Powerwall 2 home batteries due to fire risk, leaving households without backup power while waiting for a fix. Context: Tesla Energy has been a bright spot investors watch for diversification beyond vehicles, especially as grid storage grows. Powerwall is also brand adjacent to safety and reliability. Any perception that Tesla can brick an expensive home product for months can affect future demand, referrals, and installer enthusiasm. Details: reporting says affected customers had Powerwall 2 units disabled remotely because of fire concerns, and some are waiting months for resolution. The story emphasizes frustration with customer support and the disruption of losing backup power. Impact: investors should think about this in 2 ways. 1. Near-term cost. Service campaigns, replacements, and logistics can raise operating expenses in the energy segment. 2. Medium-term demand and mix. If consumers delay Powerwall purchases or choose competitors, that could slow residential storage growth. While utility-scale mega-pack deployments are the bigger revenue engine, residential is important for brand trust, cross-selling solar, and recurring service relationships. Takeaway: watch for whether Tesla clarifies the scope, how many units, which production batches, and whether it becomes a formal recall or stays a targeted safety action. Limited scope is manageable. A widening scope raises risk to Tesla Energy momentum. Story 3. Tesla's patent hints at Starlink integration into vehicle roofs. Hook. A new Tesla patent filing suggests Tesla may be exploring integrating satellite connectivity hardware directly into the vehicle roof. Context: connectivity is becoming a competitive feature, especially for vehicles used in rural areas, fleets, and eventually robotaxi operations where uptime matters. If Tesla could offer seamless satellite backup for data, maps, over-the-air updates, and possibly teleoperation support, it could strengthen its ecosystem moat. Details: the report points to a patent describing a roof structure using radio-frequency transparent polymer materials designed to improve communication with external devices and satellites. The implication is that Tesla could be designing vehicle hardware to better accommodate satellite antennas, with Starlink the obvious candidate given the Musk ecosystem. Impact: near term, patents do not equal products, so investors should be cautious. But strategically, this matters. If Tesla can bundle premium connectivity that is meaningfully better than cellular-only service, that can support higher average selling prices through subscriptions, improve customer satisfaction, and reduce connectivity failure modes for advanced driver assistance. For valuation, any credible path to higher margin software and service revenue tends to be supportive. The risk is execution and regulatory. Satellite hardware in vehicles could add cost, complexity, and approval hurdles. Takeaway: watch for concrete signals, a Tesla connectivity plan update, hardware mentions in service documentation, or a future vehicle refresh that includes improved antenna design. Patents are early smoke, not confirmed fire. Story 4. The Tesla versus Waymo robotaxi debate is heating up again. Hook, a prominent tech analyst, says Waymo is far ahead of Tesla in robotaxis, framing it like a blowout score, but also warns the game is early. Context: Tesla's long-term bull case often leans on autonomy turning cars into revenue-generating assets. Waymo, backed by Alphabet, is the most visible operator with real driverless ride-hailing in select markets. Investors track this rivalry because it informs timelines, competitive positioning, and how much autonomy optionality Tesla deserves. Details: the commentary highlights Waymo's operational lead today versus Tesla's approach, which relies heavily on vision-based autonomy and scaling through consumer vehicles. The scoreboard framing is meant to emphasize present-day deployment reality. Impact: in the short run, this can move sentiment, not fundamentals. But sentiment matters for Tesla. If the market starts pricing Tesla more like an automaker and less like an autonomy platform, multiples can compress. On the other hand, if Tesla demonstrates accelerating full self-driving capability improvements, broader geographic performance, and a credible path to supervised to unsupervised operation, the narrative can swing quickly. Takeaway: the metric to watch is not hype. It's measurable autonomy progress, safety data, disengagement trends, real-world reliability, and regulatory permissions. And importantly, whether Tesla can monetize autonomy at scale without crushing unit economics. Story 5. Elon Musk's XAI comments and the data center political fight spill into Tesla optics. Hook. Musk is publicly battling over AI data center expansion while also telling XAI staff he believes the company can surpass rivals and reach artificial general intelligence as soon as 2026. Context: Tesla investors care because Tesla's autonomy stack, dojo-style compute ambitions, and broader AI positioning are part of the long-term story. At the same time, massive compute buildouts raise questions about capital intensity, energy demand, and political scrutiny. Details: reports describe Musk criticizing calls for a moratorium on data centers and separately making ambitious internal predictions about XAI's trajectory and the scale of its compute infrastructure. Impact: the investor relevance is indirect but real. On the positive side, it reinforces that Musk is pushing hard on AI, which aligns with Tesla's autonomy ambitions. On the risk side, it can add distraction concerns and invites political and regulatory attention around energy usage and grid impact, especially as AI infrastructure expands. Takeaway: for Tesla shareholders, the key is whether Tesla's own AI roadmap translates into product milestones, safer and more capable driver assistance, higher take rate for full self-driving, and ultimately new revenue streams. Talk about AGI does not substitute for quarterly execution. Now let's tie today's themes together. The biggest near-term overhang is clearly California's DMV action. A 30-day sales suspension threat is the kind of headline that can hit the stock quickly because it's concrete and time-bound. At the same time, Tesla has two longer-term narrative levers in the news: connectivity and autonomy. The Starlink-style patent is a potential ecosystem advantage, while the Tesla versus Waymo debate reminds everyone that autonomy is still the core valuation battleground. And finally, the Powerwall situation is a reminder that Tesla energy growth depends not just on demand, but on trust, safety processes, and support execution. That's it for Tesla Daily News Podcast on December 19th, 2025. Quick recap: watch California regulatory developments and Tesla's marketing changes closely. Monitor whether the Powerwall issue expands or resolves quickly. And keep an eye out for tangible autonomy and connectivity product signals beyond patents and commentary. For tomorrow, the big thing to watch is whether California regulators or Tesla provide additional clarity on timing, specific required language changes, or appeals that could affect the probability of a sales pause. If you found this useful, subscribe for your daily Tesla update and follow us for the next episode of Tesla Daily News Podcast.